All right, so we have relative equal lows marked out over here. The market has traded down through and created a run higher. The market trades down into it here, sends it higher. What's above here? Buy side liquidity. This old high back here could be a draw on liquidity as well. So there's going to be buy stops. Whether it trades there or not, it's irrelevant. Okay, it's likely to draw to it. Just like, playing horseshoes. You ever played the game horseshoes? Not every single time you throw a horseshoe is it going to go on that post. But I want to go into this very day right there. Okay, the 10th. So we're going to drop down into a 15-minute time frame. All right, here's the 15-minute time frame, and we're going to mark up our chart. Midnight New York time. Market rallies in here. Yeah. And then we go into the New York session right here. So we're going to go into this price structure and ferret out the run that occurred in here. So I'm going to put a rectangle in this area so that way we know what we're looking at relative to this 15-minute time frame. You guys ask why I do PowerPoint slides. This is the reason why. Makes it a lot easier to go right to what I'm looking for. All right, we're going to drop down to a 5-minute chart. Okay, and if you take a look at (7 o'clock in the morning, 10 o'clock in the morning), that's your New York ICT kills in. Okay, that's the time of day that New York session trades form. All right, so here is the time of day that the forming of a New York setup forms. All right, so we have the market trading down, takes out a swing low, trades down below that, and then punches higher, right above this swing high. Inside this price leg right here, is there a fair value gap? We're going to start breaking it down top down from 5-minute, top down. We're going to break it down from the 5-minute down to the 1-minute chart. So from this low up to this high, right in there, that's what we're going to study on each new time frame. So we'll go down to a 3-minute. Okay, so in this price leg here, do we take out a swing low? Yes. We trade down below a swing low. Does it take out a swing high here? Yes, it does. So now we have a valid condition to see if there's a trade. Go back through this price leg. Is there a fair value gap? Right in here. And this one here. So remember what I was teaching you? It could stab down there. Just be mindful of that. But try to get your entry in on that one there. And that's what we have here. It trades down to it there. Now, the question is going to be is how far will it trade to? Because we're not looking at anything over here like it's a middle of the range type idea. So for expansion type moves, practical lesson tonight, where if we don't have a range to trade inside of, how do we anticipate how far it can trade up or trade down? In this case, we're looking for a long. Where would our targets be? Because the old high is over here. Now, I'm sure if we went to a hard time frame, keep looking to the left, we'll find something. But a real easy way is to take your price leg over here. See this swing low right prior to this run up? Then we consolidated, dropped down, created a discount, and then created our retracement rally and start to run up into these highs. How can we know? Well, I like to take a fib. Anchor it. Don't let go of mine. And anchor it to a previous swing. Okay, so from this low to this high, after we leave this consolidation and start to trade higher, Standard deviation, -1. And I got a lot of questions. You know, what's my setup for my fib? I actually show that on the OTE primer video. So you're welcome to go take a look at that on the YouTube channel as well. 133.153. And that's not that. Let's see. High is 133.15 and 3. So right to the